Boom. So look, this is my last video on the warning. My final warning to investors, to traders, to crypto investors, to stock investors, to everyone who's positioned long on risk assets. Markets are about to drop. I've been calling since the inauguration that this is going to be a sell the news event. I was calling that since the election rally that actually took place in November, that prices would rally and that we should expect a sell the news event to occur on the inauguration as sentiment shifts from bearish to bullish, from bullish to euphoric, and from euphoric to now reality, pricing in a decline in prices back to a more reasonable and sustainable price. Crypto might be different. It all depends on what happens at this level here. But in regards to stocks, the sell the news event is still in play. So what I'm expecting to happen in the stock markets is for the price to just continue to trade in a range, and at some point potentially break below the low of the range and refill imbalances at lower levels that are yet to be refilled. We're still going to have to wait and see what happens with data to see if data supports lower prices. But at the moment, we're just likely to just continue trading within this range here, and trade from a premium back down to discount, back up to premium. I've been talking about this for the past 2 weeks on the channel. I think it's important that you subscribe if you want to get all the latest up-to-date technical analysis, fundamental analysis, news analysis, all my trading analysis. I also positioned a few weeks back into Hong Kong, and this was prior to the news release on DeepSeek, and obviously, lovely enough, this has played out. Hong Kong's been rallying, gold has been rallying, US 30 Nasdaq has been falling, and I'm expecting this decline to now continue much more aggressively. But what do I see happening with crypto? I've talked about this multiple times in previous videos. I expect the decline to continue, mainly because what we're seeing right now is to do with liquidity and how institutions measure liquidity. I'm going to give you guys a quick guideline onto how liquidity is measured by institutional investors. So there's something called the Treasury General Account. And when the Treasury General Account in the US, it's called the TGA, when it's spent down, what happens when the Treasury General Account is spent down, that means more money flows into the economy. But when the Treasury General Account is saved up, I should say, or when the balance increases, which we can see here, the balance has been increasing steadily. This basically means less money is being spent in the economy by the Treasury and more is being saved. And what that means is less fiscal spending basically means more money flowing into the economy, and basically more less liquidity for markets, which leads to a decline in asset prices. So that's how it works in regards to fiscal policy. In regards to monetary policy, though, and all of this has the same effects on markets. This is why crypto is a risk-on asset market. Stocks are risk-on. Gold's risk-on. All these asset prices are all risk-on asset prices. It's all based on liquidity. So when liquidity increases, when the Treasury General Account is spent down, when the reverse repo market is decreases, and that's another thing that I want to talk to you guys about. What the reverse repo market is basically the overnight facility that banks use to increase or decrease their liquidity levels when there's high amounts of liquidity in the global economy. The reverse repo market tends to not be used as much by banks, which basically means there's more money flowing into the economy. So yeah, the reverse repo market Treasury General account are all signalling a reduction in global liquidity, which is likely to continue over the next couple of months, and should lead to the Federal Reserve shifting, or should I say switching, their current stance. At the moment, they're quite dovish, but I'm expecting them to shift to a more hawkish policy. Hawkish basically means they're going to restrict economic activity due to higher inflation rates. All of this is really extremely technical, but these are the type of things I look at and I follow, and what leads to make me position for a particular direction in the market. And at the moment, I believe asset prices are really going to struggle this year over the next couple of months unless we get a reduction in interest rates, unless the Fed becomes more dovish. And at the moment, it seems like the Fed are positioned to be a lot more hawkish. So, as I said, this is my final warning to investors. Get out, or not get out completely, but take some profits, especially if you're in Bitcoin, Ethereum, Solana, any of these crypto assets. If you're positioned long in the NASDAQ, in US 30, in any of these, or you trade them, now's not really a time to be positioned long. I'd say take some profits off the table. But yeah, that's pretty much all I got for this video. It's just my final warning to investors. I'm about to head off on. I'm about to fly to the gym really quickly. Just wanted to drop this video really quick just to let you guys know this is my final warning to investors. But yeah, if you don't believe me, your money is probably gonna dwindle away in the next couple of months, or over the next quarter. But yeah, it's been Take Note. Hit the subscribe button as well.